Right now, 72 public companies make up more than 3.5% of the supply of Bitcoin. And that is going into deep, dark, cold storage. So we've gone from speculative retail that buys at the top and sells at the bottom to now deep, dark, cold storage from institutions and these funds. At the same time, we've gone from $1,000 checks to billion-dollar checks. So I think we're going into a more of that parabolic part of the S curve, which then makes the price movement more asymmetric. I think we'll see more upside than we see a muted downside because we're seeing bigger checks coming in, pushing it up higher. But when the market does roll over, we won't see as much selling. And I think the selling gets muted. I'm not saying it's not going to go down again. Of course it goes up and down, but maybe we still get the same upside volatility, but maybe instead of an 80% drawdown, it goes down to 50% or something like that.
We've entered the second phase of the Bitcoin cycle, and it looks very different from the first. Retail investors laid the groundwork, but now institutions are stepping in with real size and strategy. Mark Moss says the stage is defined by big funds and companies, not small traders, and the scale of capital involved changes everything. He points to treasury-focused firms like Matador as clear examples of how this wave is forming in real time. The money driving these moves isn't limited to Bitcoin's own market. Institutions are pulling from the $200 trillion equity market and the $300 trillion bond market, massive pools of liquidity compared to Bitcoin's relatively small size. That means almost unlimited fuel for accumulation. They're using sophisticated financing methods such as at-the-market equity raises or convertible debt to buy more Bitcoin. These tools allow firms to expand their holdings without exposing themselves to catastrophic risk if conditions shift. Moss cautions that the real danger would come from companies loading up on fixed-term debt which demands repayment at exactly the wrong moment in a downturn. That could invite balance sheet stress and forced selling. But for now, most of the financing is structured as non-recourse or convertible, which converts into equity rather than triggering a fire sale. Yes, some players will eventually overextend and collapse, but that's the nature of cycles. At this stage, Moss says the momentum is still firmly with growth, not contraction. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
It's a very interesting part of the market right now, and it's exact. You asked, I'm going to answer that question, but you asked where we are in the cycle. And I said, in the first phase is retail. The second phase is institutional and sovereign. So this is a natural part of this move. It's time for the institutions to come in. That's exactly what's happening. I have a front row seat to this because with my fund, Bitcoin Opportunity Fund, we invest into all these deals before they go public. I have a front row seat to a company called Matador, and part of that company, we're doing a treasury strategy. What I would say about it is first of all, will there be too many companies and a washout? Yes, of course. Number one, we know human emotion is there, and what humans will do is they'll push things too far. They'll take on too much risk. They'll take on too much debt. Number one, that's humans. Number two, the very nature of the business is to lever up as much as you can. So the nature of the business is leverage, plus humans will take it too far. So of course there will be some that will take it too far, and there will be a big washout. I would say that I don't think we're anywhere near that stage right now for a couple of reasons. Number one, a lot of people doubt how many of these companies the market can bear. A lot of people think that MicroStrategy is going to win the whole thing. There's not going to be room for other people. And I think that's a completely wrong take. If you look at what's happening is people are still, Jeff Booth talks about this all the time. We're trying to understand a new paradigm from the one that we're in today, and it doesn't make sense to us. And so what's happening is you're looking at these new treasury companies with a traditional financial lens, and it doesn't make any sense, and we can't make sense of it. Even in my fund, some of my partners, they're still like, but what's the underlying business model? I'm like, get out of here. You're not Benjamin Graham, dude. That was like 100 years ago, right? So there's a whole new set of metrics today. I'm going to talk about this at my keynote here. So for example, instead of PE ratios or return on employees or, cash flows, discounted cash flows, instead it's now BPS, like Bitcoin per share. And now it's MNAV, and it's days to cover. And so it's a whole new set of metrics. And what I would say is MicroStrategy was a software company, and they still sell software today, but really what their product in the market today is MSTR, their ticker. And each one of those tickers is basically a different financial product. And then we have MetaPlanet, and then we have the blockchain group in France, right? And each one of those is a little bit different. So the blockchain group, for example, their stock's up 2,000% in 6 months, and they're doing a Bitcoin bond. No one else is doing a Bitcoin bond. So that's a different financial product. So then the question I would ask is, well, how many financial products can the market bear? Tens of thousands. right? An ETF, anybody could make an ETF. It's a basket, and then you make up the basket of whatever you want. So you can almost look at each one of these as like an ETF. How many ETFs can the market bear? Tens of thousands. So I don't think we'll get to a point where the market gets too saturated. Each one of these companies will do something different. Now, that's a lot different than if some will get into danger, because the very nature is to leverage up the Bitcoin that you have. So you're tapping into public equity markets and public debt markets to lever up the Bitcoin that you have. So I think there's a couple ways that you can look at this. So number one, I had dinner with some people last night, and they were thinking that, yeah, but how much appetite is there for these companies? But they're thinking about it from how much Bitcoin money there is. But these are tapping into the $300 trillion bond market. These are jumping into the $200 trillion equity market. That's where the money's coming from. And so there's an almost endless amount of money coming from that right now. But what we're looking at is, the way that I'm sort of seeing this, is you have these companies using the public debt and equity markets to get the Bitcoin. So they're selling their stock at the market ATM to buy more Bitcoin, or they're borrowing debt, convertible debt, to buy the Bitcoin. But let's just say that people are buying that right now. Metaplanet's like a 6.8 times MNAV. So it's a multiple, like a PE ratio, right? So maybe they buy at the equity at a 6.8 and it drops to a 3. Well, in US dollar terms, they lost money, but Metaplanet's Bitcoin per share could go up. So to these Bitcoin companies, they're thinking one Bitcoin is one Bitcoin. So when you're like, but what happens in the next bear market? If one Bitcoin is one Bitcoin, there's no bear market. You're still thinking in US dollar terms. So if you had term debt, when that debt is coming to term, then the speculators could attack that and push the MNAV down and try to take the Bitcoin for less than the book value of it. You're absolutely right. But we're not seeing that. So right now, the companies that are in the space right now are taking convertible debt. So it's like non-recourse debt. So the money is not due back by a certain date. It converts over. So for example, it can convert over into equity of the company. So, okay, now we'll just take equity, right? So it's not that. What you've described could be dangerous. And I would imagine some companies will do that. And those companies could get into danger if those conditions happen. But that's not the situation that we have today. Nobody's in that situation right now. All the debt that's happening is either non-recourse debt or convertible debt. And so there is no function where they'll be forced to sell it like that.
Bitcoin is no longer a fringe experiment. Mark Moss explains that it's crossing the chasm into mainstream validation. 14 years into what he sees as a 50-year cycle, institutions and governments are beginning to recognize and adopt it. This marks a pivotal shift from early retail enthusiasm to the phase where major players step in and scale the market. Moss highlights how technology adoption typically follows an S-curve. The journey from 0 to 10% adoption takes years of struggle, but once it passes that threshold, the leap from 10 to 90% happens at an accelerating pace. According to him, Bitcoin is entering that steep section of the curve where growth can turn parabolic. That's what makes this moment so critical. Adoption can snowball quickly once the foundations are in place. The remarkable part is that Bitcoin has reached this stage despite years of government pushback and regulatory crackdowns. It hasn't been nurtured by friendly policies, it has survived in the face of resistance. Now the tide is turning. Governments, sovereign wealth funds, and political leaders are beginning to treat Bitcoin as a tool rather than a threat. Moss says that shift marks the true beginning of phase 2. Let's get back to the interview.
I'm pretty well known for talking about big cycles that happen. For about 5 years, I've been talking about them. Bitcoin Mina in Abu Dhabi a couple months ago, I broke it down where we're at with Bitcoin's price overlaid with cycles. Here, Bitcoin in Prague, I'm going to talk about as well. But we have about every 50 years, we have a technological revolution cycle. A K-wave cycle, I call them a quantum wave cycle. But for the last 300 years, every 50 years, we have a new cycle that happens. Industrial revolution, steam engines and railways, steel, heavy equipment, electricity, oil, automobiles, mass production. 1971 was microprocessors, personal computers, telecom. And now here we are 50 years later, having another one. When a cycle repeats 2 or 3 times, it's likely to happen a 4th or a 5th. When it happens 4 or 5, it's going to happen, right? Here we are the 6th time. Now, each one of these 50-year cycles has this repeatable process that happens, mostly because of human nature. And so there's 4 distinct phases of this 50-year cycle. So Bitcoin is leading what I call the decentralized revolution, which is this new 50-year cycle that we're in. And we're about 14 years into it, or going into phase 2 of that right now. Now, there's a bunch of ways that we can look at technology. One is this 50-year cycle, the 4 phases. The first phase is what's called the eruption. So this is when the new technology was created. There's a lot of attention brought on by that, a lot of speculation, but this is just the beginning. This is the nerds. This is just not even the true believers yet. Then as it goes up, you can overlay, I'm sure you've seen the diffusion of innovation, which is a bell curve, and you've sort of referenced it before. So you have the true believers, the innovators. Then you have the early adopters, and then there's something called a chasm. And then you have the early majority and the late majority, right? So that's like a bell curve. And so I think we're past the 2 phases. We're about 15% adoption. We're going through the chasm right now. The chasm is where something has to psychologically change for the early majority to start coming in. And I think that's the adoption by the governments, by the institutions, the Wall Street institutions that are making it legitimate. So we talked earlier about sort of like the boomers who like, I don't know if that's true. It's probably a scam coin, something like that. I mean, we're literally still at this point in time where you have Larry Fink, the largest asset manager in the world, saying to buy Bitcoin, and Ray Dalio, the largest hedge fund in the world, saying to buy Bitcoin, and President Trump, the president of the free world, saying to buy Bitcoin, but your cousin's still telling you it's a scam coin. Like, it's kind of weird because your cousin ain't smarter than those. I think that's where we're at in the cycle. Now, we can take that diffusion of innovation, we can overlay that to this 50-year cycle, and then there's also, in technology, we use something called an S-curve. And an S-curve measures how fast the innovation gets diffused out to the public. And so the way an S-curve works is the time it takes to go from 0 to 10% is the same time it takes to go from 10 to 90%. 80 to 90% is typically considered full adoption. Still some people that don't use the internet today. So where we're at, I believe, in this 50-year cycle, we're just going into phase 2. We're about 14 years into it right now. Overlaid with the diffusion of innovation, we're just crossing the chasm right now before the early majority comes in. And when you overlay that with an S-curve, we're just going into the parabolic part of the S-curve. And we can see this through a lot of different ways. That's how we measure technology. But now let's talk about, like you mentioned, the politics, right? So Bitcoin has done what it's done in spite of being attacked by governments, in spite of the Biden administration's, Operation Checkpoint 1 and 2.0, for example. It's done all of that in spite of that, with massive, what we'd say, headwinds against it. Now those headwinds went to tailwinds. Now we have, you mentioned, left and right in the government. I would just look at it a little bit differently. We have the full government backing it at this point. I mean, SBR, a sovereign wealth fund, Trump himself buying Bitcoin, the states, et cetera. So we've gone from a headwind, and now we've gone to a massive tailwind, pushing it farther. At the same time, what happens is in the early 2 stages, because it's a retail move, we have people with thousands of dollars or hundreds of thousands or millions of dollars coming in. Today, we have billions, tens of billions, hundreds of billions coming in. So we've gone from small checks to big checks. We've gone from illegitimate to legitimate. We've gone from massive government headwinds to tailwinds. And that's what pushes us up into the parabolic part of that S-curve. And so I think over the next 10 years, we'll go from 90%, 80% adoption, which is a massive parabolic move. I think there's a couple of things that I think also are worth noting in that. There's a lot of talk about like where we are in the 4-year cycles and if we're going to get another massive drawdown. And there's never been an asset that would go up or down in a straight line. So everything moves up and down. It's volatility is what I call the difference of perception of reality, perception and reality. And so it goes up and down like this. But I think what happens is, number one, as the asset gets bigger, the volatility gets dampened because it's much harder to move a $2 trillion asset than a $500 billion asset. But I think what's also happening is we're getting a change in the makeup of Bitcoin holders. So because the way technology works, in the beginning stages, it's retail driven. And what happens with retail is, as we already discussed, most people don't understand what it is or why they're buying it. And so because humans are motivated by pain and pleasure, stupid animals, as it's going up, people are making money, pleasure is coming in buying it. And as soon as it rolls over, pain, they sell. And that exaggerates the volatility of that asset. What we're seeing right now is a massive transfer of wealth, unfortunately, from retail to institutional. And it makes me sad because I want the people to benefit from this, but it's all going to the institutions today. Now we have not just institutions like, obviously the ETFs, for example. There's pension funds, all that stuff buying Bitcoin, but also now we have the Bitcoin treasury companies, right? And they're massive buyers. Right now, 72 public companies make up more than 3.5% of the supply of Bitcoin. And that is going into deep, dark, cold storage. So we've gone from speculative retail that buys at the top and sells at the bottom to now deep, dark, cold storage from institutions and these funds. At the same time, we've gone from $1,000 checks to billion-dollar checks. So I think we're going into more of that parabolic part of the S curve, which then makes the price movement more asymmetric. I think we'll see more upside than we see a muted downside because we're seeing bigger checks coming in, pushing it up higher. But when the market does roll over, we won't see as much selling. And I think the selling gets muted. I'm not saying it's not going to go down again. Of course it goes up and down, but maybe we still get the same upside volatility, but maybe instead of an 80% drawdown, it goes down to 50% or something like that.
Cycles in finance often unfold quietly, but what's happening with Bitcoin is anything but subtle. The market is transitioning from scattered enthusiasm to concentrated strategy, where large pools of capital are reshaping both the pace and scale of adoption. Unlike the fragile experiments of its early years, Bitcoin is now drawing from vast reservoirs of wealth tied to stocks and bonds, pulling liquidity from arenas hundreds of times larger than its own. The financing methods being deployed show a level of sophistication that protects firms from catastrophic missteps, even if some players eventually overreach. What stands out is how Bitcoin has carved its place without favorable policy winds surviving crackdowns only to emerge stronger. That resilience, combined with accelerating uptake by heavyweight institutions, suggests this phase could trigger a transformation that feels less speculative and more structural. As capital continues to migrate and adoption accelerates, could Bitcoin's evolution from outsider to mainstream force redefine the architecture of global finance in the decades ahead? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.